Samsung just posted its best quarter ever, 1,800% profit growth, and the stock fell 7%, dragging chips down with it. 4 more stories moving the tape. Let's get into it. Samsung flagged a record 89.4 trillion won, $58 billion, quarterly operating profit, a 19-fold jump that tops both NVIDIA and Apple in a single quarter. DRAM prices rose 44%, quarter on quarter, NAND 53%. Memory pricing is the entire story, and it confirms the supercycle is real. But here's what should worry bulls. The stock fell 7% anyway. After a 150% year-to-date run, the blowout was already priced in. A textbook sell the news, and it dragged the whole complex lower. Intel and Applied Materials off 10%, AMD down 8%. The bear case is simple. If a 19-fold profit beat can't lift the stock, the memory trade is fully discounted, and the easy money is gone. The forward signal comes tomorrow. SK Hynix prices its NASDAQ listing, the market's next direct vote on whether AI memory appetite still has room to run. Apple committed more than $30 billion to Broadcom through 2031, locking in over 15 billion American-made chips and a $1.5 billion expansion of Broadcom's Fort Collins, Colorado, plant for advanced RF and wireless components. On a day when chips were bleeding, this was the rare green shoot. Concrete, bipartisan-friendly CapEx that has nothing to do with the AI bubble debate. It directly boosts Broadcom's non-AI franchise and reinforces Apple's onshoring story, just as Washington pushes domestic manufacturing. The bear case. It's a supply contract, not a demand catalyst, and it lands even as Apple accelerates its own in-house silicon, a long-term threat to the very relationship it just extended. The forward signal. Watch Broadcom's next earnings for whether this RF business offsets any AI networking softness. If management raises non-AI guidance, the diversification thesis gets real. If not, it's a headline without numbers. The AI trade cracked on a second front Wednesday after President Trump told a NATO summit the Iran ceasefire is over amid renewed strikes. Dow futures fell 527 points, NASDAQ 100 futures down 1.1%, and oil surged. Brent up 5.3% to $78. Micron took the sharpest chip hit, down 4%, and now 25% below its 52-week high, stacking geopolitical risk right on top of the Samsung-led memory sell-off. Here's why it matters. After record highs, the AI rally is now tightly coupled to macro shocks it spent months ignoring. The bear case is the setup itself, a market priced for perfection, meeting an oil spike and a widening war. The forward signal. Watch crude. If Brent holds above $75, expect the energy versus tech rotation to deepen. A credible de-escalation headline snaps it back the other way fast. SK Hynix set final terms on its blockbuster U.S. listing, 177.9 million American shares for roughly $28.1 billion, trimmed from a $29.4 billion target after weakness in its sole stock. Pricing lands tomorrow, July 9th, with trading on NASDAQ under ticker SKHY beginning Friday. This is Wall Street's next real stress test for AI memory appetite, and it arrives at the worst possible moment, one day after Samsung's record quarter got sold and chips broke down. Note the caveat, it's technically an uplisting, not a true IPO, since Hynix already trades in Korea. The bear case is right there in the downsizing. Cutting the deal size into launch is rarely a sign of overwhelming demand. The forward signal. Watch Friday's debut. A weak print echoes straight into Micron, Samsung, and the entire memory supercycle trade. A strong one says the AI hardware bid is still alive. Investor Jason Calacanis says NVIDIA is taking the gloves off, pushing its Nemotron open weight models, Reasoning, RAG, multimodal. Hard enough that, in his words, you won't be able to tell Jensen Huang's open-source model from Claude for 95% of your searches. The thesis: NVIDIA moves up the stack from selling chips to capturing model layer value, putting it on a direct collision course with OpenAI and Anthropic, the very companies buying its GPUs. If it works, NVIDIA owns the whole AI stack instead of just the picks and shovels. The bear case: this is commentary, not a product launch. Thin sourcing and competing with your biggest customers is a dangerous game. The forward signal: watch enterprise adoption of Nemotron. If open weight good enough starts undercutting frontier API pricing at scale, that's when the model layer threat stops being a podcast talking point and starts showing up in someone's revenue. The through line today: the AI trade is no longer a one-way bet. Samsung's record quarter got sold, geopolitics reasserted itself, and tomorrow's SK Hynix pricing is the next real tell. If you want to stay ahead of the tape, subscribe. This has been the Daily Alpha.